What's up everyone, it's Cody here. I've been asked by my subscriber about creating a weekly stock market update. So in this short video, I will first share with you the takeaway from Berkshire Hathaway's earning release from yesterday, and I will then share the results of some popular earning report this week, and any reports I'm watching closely in the coming week. I'll also share my overall strategy for the coming week to help you with your trading decision. At any point of the video, if you feel like the video is value added, don't forget to smash the like button. Now let's get right at it. I'll give you a recap of Berkshire Hathaway's earnings release on May 2nd in 2 minutes starting now. Berkshire Hathaway lost $49.7 billion in the first quarter. The loss compared with a $21.7 billion profit during the same quarter a year ago. The portfolio includes stakes in financial firms like Bank of America and American Express, both of which report steep drop in earnings for the first quarter, and 4 of its biggest U.S. airlines. In his regulatory filing disclosing his quarterly results. However, Berkshire said that paper gains or loss on his investment are often meaningless in understanding his overall health. What this means for investors is that every up and down movement of stock Berkshire owns has to be included in the earning report, even if Berkshire has not exited the position. Investors who are following Berkshire's portfolio closely has to read the earning report with a grain of salt, and not confuse unrealized loss with actual realized loss. Warren Buffett is known for long-term value investing, so he's not particularly worried about short-term fluctuation in this portfolio, and he's confident about their long-term outlooks. Also, a lot of value investors were waiting for Berkshire's earnings report on May 2nd to see what they were investing during the last market bottom on March 23rd. Buffett surprised a lot of investors by staying on the sideline with cash raising to $137 billion. Berkshire only bought $1.8 billion of stocks on a net basis in the period as the market plummeted. Berkshire only bought $1.8 billion of stocks on a net basis in the period as the market plunged. Berkshire took a more cautious approach to stock buyback in the first quarter, repurchasing just $1.7 billion. It spent a record $2.2 billion on buyback during the last 3 months of 2019. Unlike the market crash post-global financial crisis in 2008, when Buffett went on a buying spree, he has been laying low amid the ongoing crisis, leaving investors to wonder about his outlook on market and economy and how he intends to deploy Berkshire's $128 billion cash pile. It's also been a very busy earning week, so I'll give you a recap of highlights of some popular stock in 1 minute. Tesla asked workers to return to work in Fremont, California on April 27. Tesla cancels the plan to bring employees back to work on April 28. Tesla earnings report surprised investors of $16 million in profit for Q1 on April 30th. Tesla shares fell on Elon Musk's stock price too high tweak on May 1st. Amazon report first quarter results late Thursday that beat Wall Street expectation on revenue but missed on earnings, as it expects to spend billions on global health related expense. Amazon stock fell. Alphabet report earnings significantly below expectation for its first quarter on April 28th. Alphabet CFO Ralph Perret blamed this on significant slowdown in ad revenue. Microsoft stock rises after company report 15% sales jump and say global health concerns have minimal impact on revenue. Apple will continue to buy back its stock amid the pandemic. It has authorized an increase of $50 billion in the company's share repurchase program. Even though Facebook said it saw a steep decline in ad revenue in March due to the global health concern, it also said the first few weeks of April began to show stability, injecting optimism in the stock. Whew, what a 1 minute recap. If you like that 1 minute recap, please use your 1 second to click the like button below. General Motors will be releasing its Q1 2020 earnings report on Wednesday morning 8:30 a.m. GM has taken a 42% beating year to date, and GM also the 15th biggest in Buffett's portfolio. General Motors suspends quarterly dividend on April 27 to preserve cash as the global health concern disrupt its production since mid-March. It's not that long ago when GM filed for bankruptcy during the last financial crisis. Okay, I will not dive into details about GM in this video, but I will say this. Japanese automotive manufacturing company weathered through the last financial crisis without laying off a single employee in Canada. This is a showcasing of how resilient some company in the same industry could be during an economical downturn. With the production disrupted since mid-March, the Q1 earnings report might only include a snapshot of the impact, and it's important to keep monitoring how the negative impact of production and consumer demand continue in Q2. If the situation continues, the Q2 earnings report will be a lot worse than Q1. Also, many of you who follow my channel know that I like to invest in stock with good dividend history to fruitfully weather through economical downturn. With GM cutting its dividend on April 27, it's less appealing to me. Another popular stock, Disney, will be releasing its Q2 earnings report at 4 p.m. on May 5th for the period ending March 31st, 2020. Disney stock has been taking a 50% hit from its all-time high, so is this a good time to invest in Disney now? Is the stock going to make a V-shaped recovery or just a dead cat bounce? During the last earnings report ending December 28, 2019, Disney beat their earnings expectation on both the top line and the bottom line. Also, the subscriber on Disney Plus has increased from 10 million to 26.5 million since the launch in November 2019. With the momentum of growth in Disney Plus subscriber and only half a month of park closure impacted in the coming earnings report, is this a good time to buy some Disney stock? Let's take a closer look at Disney's revenue breakdown. 1/3 of its revenue is generated from media networks. This includes the cable networks and broadcasting. Another 1/3 of the revenue is generated from parks, experience, and products. The rest of the 1/3 is studio entertainment and direct-to-consumer and international. All three revenue streams of Disney has been majorly impacted since March with only positive news of Disney+. The key question to ask here is whether the current stock price of $105 has taken the negative impact of global health concern into consideration already. If the global health concern continues, the next Q3 earnings report ending June 31st, 2020 will capture the full impact of shutdown. Personally, I think Disney has a great long-term outlook as long as there are children on the planet. But I'm not sure if the stock has reached its bottom from its technical standpoint. The stock dropped 40% from all-time high and only rebound 10% while other good quality stock rebound almost to its previous high. The stock market is a forward-looking mechanism, so investors are showing upbeat sentiment on global health concern. However, with 30 million job loss claim in US and most of the business still closed in North America, I'm not very confident about current stock market rebound. I'll be very cautious on adding major position in my portfolio. If I were to add any position, I would look for stocks with a strong fundamental and showcasing strong resilience in the stock charts from the stock bottom in March. Oh, another company that Elon Musk has founded in his early days will be releasing its earnings report at 7 p.m. on May 6. PayPal has been showcasing strong resilience in the economical downturn. The stock has fully recovered from its March bottom and reached its previous high. I only have time to give you an overall weekly stock market update, so if you'd like me to include any topic, let me know in the comment section below. Also, if you'd like to learn how to invest like Warren Buffett in 10 minutes for free, don't forget to check out the link in the description. If you like video like this, don't forget to destroy the like button, subscribe, and click the notification bell and change it to all so you'll not miss these weekly videos. You can also follow me on Instagram for things I don't cover on this channel. See you next time.